Now, investors generally break the investment world up into a number of different asset classes. And these asset classes are bucketed, or these assets are bucketed in a way so that the characteristics of the underlying assets in those buckets generally have the same risk drivers, the same type of characteristics. So, for example, equities, bonds are two of the major asset classes. Property might be another one. Alternative investments, cash. These are all different categories of assets that, again, within their asset classes have similar traits or characteristics. One type of investment that has gotten a lot of attention over the last decade or so in particular has been infrastructure. Now, a lot of investors might put infrastructure into their alternative investment bucket. Some might also put it mixed in with their property investment bucket. Because if you think about different types of infrastructure, often they have similar characteristics to property, such as yields, rental yields, for example, or similar to that, and a more, let's say, conservative growth profile compared to especially equities. But there are different types of infrastructure assets as well out there. So within the infrastructure bucket, there's a number of key investment opportunities out there, key number of risk factors out there in particular, and infrastructure investors often look to break down the infrastructure world into a number of different buckets as well. For example, energy infrastructure is a big part of a infrastructure portfolio. So energy might be distribution lines. The infrastructure needs to get the energy from where it's produced to where it's needed in particular. It can also include other types of logistics, big tankers, for example, that are moving oil around the world. You might also put transport as another type of infrastructure asset. Think again, big tankers moving things around the world, not just oil, but other types of commodities in particular, and also finished goods, moving finished goods around the world as well. Probably the infrastructure that most of us are familiar with is our public infrastructure within our communities. Roads, toll roads, for example, is an asset. Railway lines can be an asset where they're private. Airports, marine ports as well. They form part of that logistics or transport type of bucket. You can also invest in water infrastructure, water rights in particular. And so if you break down kind of these different infrastructure assets, like what are they giving you? To some degree, we can break down infrastructure assets into two key categories. One is a more defensive category, and this is the category that has more regulated assets. For example, electricity distribution is highly regulated. Often private companies will build electricity transmission lines, for example, and get them around the place. And a government will regulate how much they can charge for their electricity distribution. A lot of these regulated assets are the infrastructure that is more necessary for everyday life. So again, think electricity distribution, but also telephone communication distribution as well, perhaps. Another type of infrastructure asset of note in the social space is some of our social services, including schools, might be part of an infrastructure asset bucket, hospitals, and in some countries, even prisons. I won't name which countries they might be. But yes, there's different social goods or assets that might be privately owned and therefore might be investable assets.
Now, eagle-eyed viewers may have spotted some familiar landmarks in this video, so to play the Where is Dr. Dan game, head over to my Substack to be the first to log your location guess. See you next time.